Welcome all. Myself Ankitha. My topic is about venture capital. Introduction. Venture capital is considered as financing of high and new technology based enterprises. It is said that venture capital involves in new or relatively untired technology initiated by relatively new and professionally and technically qualified entrepreneurs with inadequate funds. It means venture capital is mainly focusing on startup companies. It gives financial help to startup companies, uh, and it also helps uh, on hiring employees and using new technology, etc. Next, meaning it is a form of private equity funding that is generally provided to startup and companies at the nascent stage. Venture capital is often offered to firms that show significant growth, high potential, and high returns. Venture capital firms are essentially intervenes with the goal of supporting entrepreneurs. For example, if I am entrepreneur and if I am looking for support in terms of money and in terms of getting resources, then VCs is one of the option that I can execute, and I can go to VCs fund. I can tell about my business idea, and I get some funding for my business. Using that money, I will build my business. I will seek support from VCs for going forward, hiring employees, and using new technology, etc. VCs make a lot of money by supporting entrepreneurs. Next, how VCs firms are structured. The high net worth individuals like Bill Gates, Kunal Shah, Warren Buffett, who are giving money to VCs fund. They give money to VCs in the form of investment and loans. When they get money from investors, they become obligated to generate return from this money and passing on it to the investors. Uh, Venture capital can be offered by venture capital firms, investment banks, and other financial institutions. Uh, Venture capital firms create venture capital funds, a pool of money collected from other investors, companies, or funds. Here, angel investors means are wealthy private investors focused on financing small business ventures in exchange for equity. Angel investors are called private investors, are wealthy individual who infuse a startup company or an entrepreneur with cash or capital in exchange for ownership or convertible debt, because they believe in the company and think it will succeed. Types of venture capital. They are seed funding, startup capital, first stage, first round or series, expansion funding, late stage funding, bridge funding. First one, seed funding. Seed funding is the capital invested to help entrepreneurs conduct initial activities for setting up company. This can include product research and development, market research, and business plan creation, etc. It can also be provided by the owners themselves or their family members and friends. Next, startup capital. It is often used to interchangeably with C funded. Usually, business owners avail startup capital after they have completed the processes that involve C funding. It can be used to create a product, prototype, hire crucial management personnel, etc. Next, first stage, first round or series. First stage is provided to the business that have a product and want to start commercial manufacturing, sales, and marketing. Next one, expansion funding. Expansion capital is the fund required by a company to expand its operations. The fund can be used to new market, create new product, investment in new equipment and technology, or even acquire a new company. Next, last stage funding. It is offered businesses that have achieved success in commercial manufacturing and sales. Companies in this stage may have a tremendous growth in revenue but not show any profit. Bridge funding. Bridge funding helps to a company to meet its short-term expenses necessary to create an initial public offering. Features of venture capital, not for large scale industries. Venture capital is particularly offered to small and medium sized business. Next one, investment in high risk or high return business. Companies that are eligible for venture capital that are eligible for venture capital are usually those that offer high return but also present a high risk. Offered to commercialize ideas. Those opting for venture capital usually seeks invest to commercialize their idea of a product or a services. This investment to increase capital. VCs firm or other investors made this investment in a company after it shows promising turnover. The disinvestment may be undertaken to infuse more capital, not to generate profit. Importance of venture capital, it only provides the financial institution but also assistant management technical and others. Venture capital is not only provide financial assistance but also helps in growth of the management technical means helps in acquiring new technologies and other. It strengthens the capital market, which not only improves the borrowing concern but also creates situations where they can raise their own capital through the capital market. Venture capital strengthen the capital market. uh, it improves the borrowing capacity but also creates a situation where they can raise their own capital. Uh, they can the entrepreneurs can raise their own capital through the capital market. Uh, Last conclusion, venture capital firms play an inevitable role in the development of the economy through capitalizing on promoting innovation, financing the development of new product, new technologies and process of the companies that are meant to directly and positively influence the economy.